Hello, everyone. Welcome back. This is This Week in Coverager. This is the podcast where we discuss interesting hot topics of the week, go into a little bit more detail, have Avi, Sheffy, myself, and sometimes a guest, and we'll debate those and talk about those, give a little bit extra perspective. I am in podcasting headquarters in Naples, Florida. In Coverager headquarters in Queens is Avi, and in Coverager's main headquarters in Brooklyn is Sheffy. Happy
Hello.
Friday.
Happy Friday. Good to be
Happy
back.
Friday, Avi. Okay, so let me kick it over to Avi. What is going to be topic number one for this week in Coverager?
So I don't know if it's a chance or luck or destiny, but a man I quoted in an old article on Coverager is entering insurance. The former CEO of Huge, the advertising agency, big, successful advertising agency, he wrote a book, Users Not Customers, and it's something we touched in the past, as we always say, and I'll say it again just because if you're new, insurance companies do not have the right to be consumer facing brands. And the reason for that is because the product, my friends, is not meant to be used, only for emergency situations, only when you have a claim. So you really is no usage. And we've seen in the past many years, I would say, at least what we remember, Google and Facebook and Instagram and WhatsApp, they benefited from the usability of their products, which got people to use them more, and it gave them a lot of power to eventually uh, sell advertising or sell products. And this guy, Aaron Shapiro, is the CEO of Dayforward, which is a stealth life insurance company that is promising a better way to protect your family. And it's a new type of life insurance. We don't know exactly what the new type is, but they've received an investment from Munich Re. Is that correct, Jeffy?
Well, they're backed by Munich Re. They raised about 20 million, and that's based on their Form D, which was filed in August 14th, so 2 days after my birthday. That was pretty much the top clicked link, at least for one day of the email. I don't remember. I think it was Wednesday that we covered it.
Yeah, I think
One
so.
of those days. But yeah, so not much is known. What we do understand is that they want to become a full stack insurer so that they can influence the product. And that's something we haven't heard before.
Mm-hmm.
Munich Re is certainly in the picture, which kind of begs the question: is this going to be something similar to what Swiss Re has with iptiQ? But for now, too many unknowns. I guess what is known is that there's someone that's coming in with a really strong marketing background.
Yeah, yeah,
Yeah,
it's
so
be interesting to see.
a non-techie.
Welcome.
And that's good. And you
Yeah,
look at Lemonade. We talked about kind of a little bit of their marketing backgrounds, although Shai is a tech guy.
yeah.
But yeah, I mean, I think it would be interesting to see what they do. I would be very disappointed if it's like one of those things where, hey, if you have student debt, you should get life insurance. Don't wait until you're 35. It's never too late. I doubt that that will be the case. And you know what? There is a chance that he read the Coverager article, or someone else that read the Coverager article said, "Who is this Aaron Shapiro guy? Let me reach out to him and give me the secrets of how to create usage." And maybe that got him into insurance. We never know.
If that's the case, then if we find that out to be true, then going forward, every single influencer post on Twitter better have you as number one, if that's the case.
By the way,
We should
Shafi,
have had him as number one for a
I,
bit now.
Sure, but
I saw you drop. I saw you drop significantly this month. I think you went to number 47 or 46. You're almost out of the top 50. And whoever's making this list, I want to tell you, my personal dream. I've never said this to anyone, but
Yeah.
we want to make history as the first brother and sister influencer on the top 50 insurtech list. And I've been working on my Twitter game. I've been getting followers, and I try to be controversial, but I don't have a lot to tweet. But maybe I'll be a thought leader as well. I see new faces coming in out of nowhere, and I wonder what I need to do to be on that list. Maybe Coverager should create a list. We'll
I
always
think we
be number
should.
1 and 2.
Yeah,
Yeah, why
yeah,
not?
definitely.
We can charge money for it.
Who has the best COVID here, Nick? I think that you're getting on. Like, I don't understand why you're not on, Avi, first of all, but
I think they think we're the same. I think they think we're married, and it's like, well, we're going to give them 2 spots. They're one entity. But we have different personalities. We don't like the same thing. Sheffy and I, we argue a lot. We're not the same. So if this is what you need to consider, then this is my pledge to you.
well,
this is the most I laughed this entire week, which was really crappy, to be honest with everyone. But okay, this is going
people
somewhere.
love lists, so I think we should make a list. Maybe we can be very magnanimous and not put ourselves on the list.
And Forbes really came out with 30 under 30 this week, and I saw someone said, let's make 400,000 under 30, and we'll increase our total addressable market significantly.
I get it. Yeah. I think that's what these lists are used for. So that's not bad as part of the business model if we want to. But with that said, with this particular story that I'm reading right now with Aaron Shapiro coming in. So when InsurTech was first forming, right, and you had a lot of tech influencers coming into insurance, I thought that was a good thing. I'm like, oh, they're going to bring a lot of positive stuff. And they have. And so it moved the needle, but it didn't, they had these lofty goals of what was going to happen. And I don't think they reached that, but they definitively influenced what was happening. This would be really interesting as well. Like if they could come in and bring a marketing, advertising bent to insurance, especially like the non-Geicos, progressives, bring that sort of thing. Kind of reminds me of this story. Kind of reminds me of PetPlan a little bit, Avi. Like a different angle.
It's really, if you look at it, like there are no surprises with life insurance, and we've talked about this. If you have the good organic positioning, like Policy Genius, also like NerdWallet, you get the traffic. Like the average consumer doesn't know Policy Genius. They don't know NerdWallet. They don't know what we know. And they go through the process. They read the article. Can I get a quote? It says get a quote. They put in their information. They hope to get a quote. So if you have that organic presence, you're going to get that traffic. And obviously it's up to you to execute well to get that going for you. But what is the answer for companies that cannot be on Google? Because we don't see many TV commercials for life insurance. We've never seen, we spoke about this, and that's one of the reasons why there's a lack of awareness, because you don't see it as much as you see car insurance. So now the trick is, if people are not searching for you, how can you get them to think of you? And with that, I mean, that's display advertising, that's social media, that's billboards, so many other things. And that is the risk, by the way, because we've seen this play out not so well with Health IQ. They went on social media, they went on LinkedIn, radio, all these channels to kind of try to get people interested. And there's a reason why Google charges more than Facebook, because this is the place for high intent shoppers. So you got to be very careful, and you got to figure out first your target market, and then an effective channel to get to those people. And obviously everybody knows to go to mommy blogs and things like that, but you'll need to figure that out. And I bet you Aaron Shapiro and the team, I can't imagine if they'll do something similar to everyone else, because like, come on, is this a joke? We're suffering already. Like, do something different.
It better not be like Pacific Life whales crashing in water. Like, what the heck does this have to do with life insurance thing? The other thing, Sheffy, would be, it would be very disappointing if so I have high expectations on the marketing and the advertising for this. So I'm expecting something creative here, but they're going to the full stack insurer. Like, if you're going to make that move, better do something good with the product too. Like, if it's just term life, or like Avi said, selling life insurance to folks that have high student loan debt, that would be disappointing too, because then I think the marketing is just still putting lipstick on a pig. But you got a thought on that?
Well, I think the fact that they have Munich Re in the picture, and what we've seen in the past with Munich Re, is that they're willing to take bets on emerging risk and emerging demographics, to be honest with you. So maybe they'll give them the opportunity to try something new. I don't have that much high expectations. We're still talking about life insurance. I still think that the traditional life insurance, the product as is, works. It's just a matter of communicating it differently to the different demographics. So the focus isn't necessarily on the product. The focus should be on the messaging, and then of course the channels. How do you actually go and get that customer? Which in a way, so obviously the context of this story, the reason we talked about Dayforward was because Bestow announced that it acquired a carrier. To be honest, some of these carriers, and I think this it came up with Hippo buying Spinnaker. It's not that I've never heard of these carriers before, is that I never have any context about these carriers in terms of activity that they're doing. So same thing with Bestow. They acquired, who did they acquire? North American?
No, they work with North American. They sent in.
So with North American, they're still going to continue to work with. So they're still going to keep their MGA unit. And then they acquired, clearly somebody without a brand awareness, Centurion Life Insurance Company, right? So this has been kind of a sleepy carrier for a bit. They're not accepting new business, but this allows Bestow to be licensed in the states that it needs and kind of carry forward with influencing the product. Now, there's been some interesting moves, right? I think it was the marketing gal of Haven Life is now working for Bestow, and then there's another individual from Mass Mutual working at Bestow. So they're focusing on building their talent. Obviously, focus on product. We'll see. If I remember correctly, Avi, they're the ones that had some trouble with their engineering team or technology stack, right?
They have trouble with the technology, and they share that they sold 10 billion in coverage. If you do the math, in the worst case scenario, most of their policies are sold are under $1 million. So maybe 10,000 policies, maybe 15,000 policies, maybe 20,000 policies. So, I mean, it sounds a lot, 10 billion, but if you really think about the ultimately what it means, it's 10 billion in coverage, and it's a problem because they don't have the organic presence. So that means they're going to pay to be seen, and so either they'll buy the leads, and most of their business comes from lead gen, and that's a problem because it really is a long sales cycle. Like, Nick, you could go for life insurance, you could put in your quote, you're a serious customer, but it's going to take you maybe a few months to decide if you want to buy, weeks. And to me, I don't understand how you can do that without having like someone on the phone making sure, calling you like, hey Nick, it's time. You need someone to bug you to not lose it, because if it's just online, you're going to probably lose the customers. So obviously for them going into the insurance aspect, I think they wanted kind of that subscription revenue instead of usually there's no residuals with life insurance. You get that big sum at the beginning of the policy term, and that's it. And of course, they're working with agents. So how can you justify being an MGA and working with agents? You're a middleman. Now you're bringing another middleman, too many middlemen. Being a carrier will allow them to justify working with agents because it really is a product where, again, unless you're the king of SEO, where you're getting a good flow of leads, you're going to need to convince people to think about the product, look at the product, and all of that.
I'm with you there. I mean, I think this conversation is going to segue into alternative, sources of distribution. But what other choice do you have, right? Like, if you can't come up with a good angle, you can't really go direct because it's going to be way too expensive. So you have to use agents or financial planners when it comes to life. If for those who are listening feeling like we keep banging this drum, it just kind of keeps circling back to this. The product, Sheffy, you said the product works. It does work. So if you can't do anything that's like outrageously different with the product, there are hundreds of companies selling term life insurance. How are you going to get cut through that noise? It's either going to be you're going to have an agent, broker, financial planner, or you're going to have to come up with something clever on the marketing side to get in front of people, because it is a long sales cycle. Maybe that's the change that needs to occur in the product, is figure out a way to shorten that sales cycle. You'll get better
Yeah.
hit rate.
I think
But what is the competitive advantage? Like the problem is that if you go to like obviously a high net worth client, price is not a factor. He's probably going to go with a company that's been around for, I don't know, 1,000 years. But then if you go for people that are a little price sensitive, then you're one of many. There's also Ladder, there's Ethos, there's AIG, there's Western Haven Life. So now what are your chances of getting selected? And that's why we always said, like, give people choice. That's why I like Policy Genius. They give people choice. So it doesn't matter who they choose, they'll get the commission. Like, I get the fact of being a carrier. They're talking about data science. And this is, by the way, a bad time to be in the life insurance business, I find, with COVID. Like, people still don't know what the long-term implications are for people buying life insurance now. And if they got it, does it shorten your lifespan? Maybe it makes you live longer. I don't know. But there's also some challenges there. But again, I understand the move. I thought to begin with, I would have liked to see them do something different. Like, to me, that was kind of where I would even looked at Clear Cover. You had the technology, help other carriers integrate at the point of sale, be the Plaid, for car insurance. How about Bestow, be the Plaid for life insurance? Of course, it's not a point of sale, but maybe you can integrate and you could partner with different money management apps and so many other things. Like, to still go try and do it on your own, it's going to be very difficult.
And we're still going to come back to this topic because essentially this all boils down to timing and execution. So there are cases where even alternative distribution, it doesn't work. Nobody's really reinventing the wheel. You don't have to reinvent the wheel in insurance. And if someone tells you that they do, it's probably a consultant that is really charging you a certain price in order to justify that you have to go a certain route that you really don't need to. But even if we look back, and even within the history of coveragers, there's enough history to say something worked, something didn't work, right? So Prudential with their life insurance for moms, placing that on baby list, right? This is a great idea and something that Avi tells me all the time, right? Separate the solution from the execution. You have great ideas, but sometimes the execution doesn't work. And what happens with Prudential and baby list? There's two things that could have happened. Obviously, one, maybe it wasn't available. The link wasn't, readily accessible. People weren't aware because obviously new, parents to be are in the market of buying life insurance. The second thing is, and this is something that I'm going to give credit to AP Indigo, because in his interview, I was asking Steve, what does success look like? And this actually didn't make, Coverager.com, but it was kind of a conversation we were having. And I told him, what was success? And the first thing is when you have to define what success is. So we'll start with, I'll keep that to you to define what success is for you, but you have to have a committed partner. And that goes both ways, right? And maybe Prudential wasn't committed enough because he had other channels that sell life insurance to them. So Baby List was maybe this small player to him. But you have to learn how to grow in a modern way. It's not an option for you to decide whether you are on Google or on Instagram. It's just a matter of figuring out how you play around in all these channels and what budget you allocate and how big of a distribution is alternative channel versus how big of a distribution is working with independent agents versus direct. I mean, there's a lot of value in being direct and being organic and in having brand recognition, not just what happened with Bestow about this carrier that was relevant to somebody somewhere, sometime, but isn't relevant to us anymore, right? So there's that, right? So, Prudential and Baby List didn't work out, but this week we learned that Hodinkee, that media company for watches and luxury watches, I should say, they're the ones that started working with Chubb to sell watch insurance. And if you go to their, to their website, the first thing you see is Hodinkee Insurance all the way at the top.
Yeah.
That's a committed partner. And he's probably committed also because it's a media company, and media company are looking to grow their e-commerce arm.
Yep.
There's cross-selling opportunities. So we'll sort of see how all of this kind of plays out, but the lack of creativity, I think, is going to be the cause of lack of execution here. Sheffy, when you said it kind of hurt a little bit when you said, how did you phrase it? Like everything all the products that are there, like they've always been there. No one's building anything that's really new here, really. And if you think about that, it's sad in some standpoint, right? That no one's actually doing anything new, but it just means you just have to execute. Like you just have to get through the clutter, through the noise, in order to get people through. And I think defining what your level of success is, and not only having committed partners, but being committed to the market that you're trying to serve. Like show some enthusiasm. I was listening to a podcast with have you ever heard of the rucksacks, the military backpacks that you can put like bricks and stuff in to go hiking, to go, really rough. So like, I listened to that guy, and I would have had no interest in a rucksack, but I listened to the passion that he had about why he was doing it, and it was beyond just like a stitch in a backpack. He was committed to building this community of people who got together, and a former military guy worried about mental health. I immediately got to my computer and looked up rucksack, right? Who are these people, these CEOs? At least Dan Schreiber is out there. I think he gets a lot of business for Lemonade just because he's out there. People know who he is, at least for better or for worse. You know what he stands for, right? And a lot of these companies are owned by or run by no names. There's nothing to get excited about. It's just a commodity. Whoever has the cheapest price is going to get the business. But if you can't even make enough noise to get in front of people, then it's lost anyways.
And by the way, this is really like execution. We understand that it's difficult, but for Bestow to send traffic to Policy Genius when they can't provide a quote, that's bad business. I'd rather you not send that traffic, because when you send that traffic, yes, you'll get money from Policy Genius. You're making Policy Genius stronger. And a strong Policy Genius, maybe now when you're a carrier, you'll be able to be on Policy Genius so they could sell you like they sell AIG and Protective and other companies. But go find yourself a car insurance company that targets millennials or young parents, and give them the business. Help them. Don't help your enemy. And this is the problem, because
okay, we have to repeat that. That's a really good idea.
No, but that's the thing. Like you're helping.
There's a lot less competition. There's a lot less competition in this industry, and should be a lot more competition. This isn't Pepsi Cola versus Pepsi versus Coca-Cola. We have a lot of players, and the problem is, obviously we really should give recognition. So first of all, we're really, really sad to hear about the passing of EverQuote CEO. We should have started with that.
Seth Birnbaum, yeah.
Obviously, this is new territory for us, but we were absolutely shocked, and condolences to the team, to the colleagues. But yeah, I don't know what to say about that. But in different context news, right? So you have to understand who you're playing with. If you are partnering with lead gen, what does that look like? Can you partner with lead gen, and then vice versa, go ahead and partner with independent agents? Independent agents, same thing. You have independent agents working with legacy insurers that are solely selling through independent agents, and then going around and working with digital insurers. So I think at the end of the day, it's everyone to himself, and you just have to be with that mindset. and decide long term, does this relationship make sense?
It's funny because you look at Geico, and Geico, they keep their cards to themselves, but they play with whoever they want to play, and it's all part of a strategy. And they're one company that's selling one product. They can do that because they're going crazy. Like they'll be everywhere. If you're Bestow, it's going to be very hard for you because you don't have the capability to do something like that. So then now you really need to be creative, and you need to be very careful with where you spend your money and who you partner with, and it may take you time. But again, it's a challenge. Like I said this years ago, I wouldn't bet on Ladder or Bestow or Ethos, or maybe someone will acquire them and they'll be a success. I'm not saying that's not going to happen, but you're not going to change right now the way the dynamic is with consumers. You're not going to change the fact that they want to compare. And you know what? Companies like EverQuote, we've criticized them in the past. That's their business, to make sure you compare, to give you options. And it might be a broken process. It's not 100% yes. In the past few months, year, they've been increasing their traffic from Google search, which means better quality traffic. So eventually you got to believe that EverQuote is going to be better, and they're going to hurt you because they have the power, because they're just in the business of facilitating the connection. They'll always have buyers. And if you're, again, alone here, then you got to be very smart, but it's going to be very challenging for you. So, that's why it'd be interesting to see Dayforward, bringing all their marketing expertise, how that's going to look like. But the places are running out. Like, there are people paying for YouTube Red, no advertisements. People paying for Spotify, no advertisements. Hulu, no advertisements. That is the customer that you want. A customer that cannot be bothered by advertisements, that is willing to pay not to see ads. I want your money because you have money.
State Farm, I think, is celebrating 1 year on Reddit, like 1 year in a month or something. So I had a chance to interview Peter Crosa, which he's an adjuster, and he has tons of stories. It was just marvelous listening to him. And the thing about him is that he was talking from an insurance standpoint, right? What happens after a claims and getting to deal with what the customers feel. And I asked him, so what has changed? And yes, of course, the business sped up. He told me, and I said, what about the customer? Has he changed? And he said, yes. I mean, there's a long answer to that, and people should read the interview. But one of the answer is the customer is more sophisticated. And we say this often. The customer now is smarter about insurance. The thing is, he may not get his insights from the independent insurance agent. They're going online. They're going to social media. Maybe they're just speaking with their friends and their family. Maybe they're speaking with Reddit. And even the other day, there was a company that I've never heard of. Reddit already knew about it. So that's the world that we live in, and that happened. So you have to kind of address that as well, right? It's more complicated.
And I'll tell you, with that, like you think about distribution, and you really need to think about the basic stuff. And the basic is that convenience is important. Obviously, an insurance price matters more than convenience because you don't shop every day. But the only thing that can win convenience and price is guilt, emotions. I want to make you feel bad, Nick, for not coming to your local bar and tipping. It's cold, you don't want to go out. I'll make you feel bad, and you'll come and you'll pay more than you need, and you'll order a dessert or an appetizer. That is the only thing insurance companies can take advantage of, is guilt, because they'll never be the cheapest and they'll never be the most convenient. And how do you do that today with, obviously small businesses struggling and all of that? That is your opportunity. And whoever will deliver guilt at scale is going to win distribution, because Google is not your place. Instagram is not for you. Facebook is not for you. This is for the nerd wallets, the policy genius that could pay top dollar, of course, companies like Geico. But if you're a smaller insurer, look at, the basics, start making people feel guilty for going to Google. That's what you need to do. That's your only chance. And we'll talk in a few years.
Let's talk about NerdWallet.
Yeah. Well, NerdWallet. Before you transition over there, because I want to, I think that's a really good point, Avi, for emotion. because I'll tell you a personal story. I was talking to an investor about my business when they were asking me about climate change and like, Nick, are you worried about climate change and what's that going to do to floods and wildfire? And I said, yeah, of course I am. I said, but there are trade-offs to that. The flip side is that it brings immense relevancy. It's in the news all the time. And Avi, to your point, it not guilt, fear, right? People who ordinarily wouldn't think of it, now it stops them in their tracks. They're at least going to think of it. And emotions bring relevancy, and so that's what's missing. With the long sales cycle in life insurance, it has to do with relevancy. It's, yeah, I got this kid and I know, but it's like I'm busy and there's no relevancy. Whereas auto insurance, you don't get your auto insurance and you get pulled over, you go to jail, right? Like you have to buy it, or you won't get your mortgage for your house insurance. You have to buy it. So it's always gearing towards making it relevant. That's part of the execution. So I think that's a segue to alternative distribution. Sheffy?
Alternative. Okay, so we've defined alternative distribution in the past, but we'll define it again just to make sure that people understand what we are referencing. The alternative distribution is not a new concept, but the idea is that we have a company from outside of the insurance industry working with a company from within the insurance industry to offer the product. That company can be an insurer, a broker, maybe an enabler company like Boost, for instance. Hi, Alex, if you're listening. So it could be all of the above, but really the focus is on the non-insurance company, because oftentimes, and this is how we started, these are the companies that have users, right? They have some sense of usability. So if we go way back when, before I even joined the insurance industry, this was probably known as affinity partnerships.
Mm-hmm.
But what has changed is that there is an integration element. Users are more aware of their credit score and how much money they don't have in the bank. So there is this element of shopping and saving and switching that is being pushed by outside players. So NerdWallet is a company like that has, they had a strong year, I'm going to say, because they've acquired 2 companies. They went overseas to the UK, and they didn't, formally or officially announce this for 54 million, but according to their filing, that's the last amount that they raised, and this was done this week. And what we're seeing is that they're sending out of the top 10 outgoing links from NerdWallet. So aside from them sending traffic to Google, the other 2 are companies in the insurance, are basically websites that pertain to insurance, and they get about 700,000 hits in the last 12 months. So if we put that, and this isn't apples to apples, but if we put that in the context of Travelers announcing today or yesterday that they acquired InsurAmatch from Plymouth Rock. InsurAmatch, despite in like 2015, 2016 being called a super agency, I don't know what that means. I know what a super app is. I don't know what a super agency is, but it's called a super agency. It's called a digital agency. I wasn't able to get a quote online. So as Avi always tells me, digital is subjective, right? So it's all a matter of where you were, how you started, where you're going, and how digital the process really is. But InsurAmatch gets about 400,000 website visits throughout the year. Now there's a really big difference between hits, between sending traffic versus somebody going to InsurAmatch. I understand that. But the question is, where's InsurAmatch going to be in 5 years from now? Not even 5 years from now. People are moving fast nowadays. Where's InsurAmatch going to be in 2 years versus where's NerdWallet going in 2 years, right? Who is growing in the right way?
Now, let me tell you something about InsurAmatch. With that, not a bad number of traffic visits. Most of it comes from organic search, and the search terms are, what is a deductible? So I want to ask you, Nick, who is this person that's Googling what is a deductible? Do you think they already have insurance? Do you think they have a claim and now they're telling them you have to pay a deductible? Is that the case? Could that be more of the cases? Because if it is, then insurance is not relevant for them. And that's why they have a high bounce rate where people come in, they see the article, and they get the hell out of here. Now, this is what we talk about basics. And you have all these tools available. So technically,
or if not, Coverager has them.
Or Coverager. So technically, if you go through organic search, when you're searching for something, to insurance companies, traditional insurance companies like Geico, Progressive, even Root, you're going to have a lower bounce rate because you're here for something. You're going to go beyond one page. You're not going to see the first page and get the hell out. This is not the case with Policy Genius. Why is that not the case with Policy Genius? Because Policy Genius appears on Google's first page when you search how to void a check. So you searched it, you saw Policy Genius, you get to the article, how to void a check or how to write a voided check. You get your information and you get the hell out. You're not here for insurance. Now, this is Policy Genius strategy to build a brand, because out of those people that come in to see how to void a check, maybe they'll go to the homepage and see the insurance offerings, and maybe they need to void a check for their new apartment that they just leased. And maybe they need renter's insurance. So the case with InsureMatch, obviously, they're no match to Policy Genius. I had to do it with the name. I'm sorry. But if you look at the searches, what is the deductible or things like that? These are questions that people are asking, and I wonder why they're asking that, because they already have interaction with insurance, some interaction. Maybe they have the product, maybe they have a claim. So now you're that. Now, what's interesting about Travelers doing this acquisition, Travelers is very competitive across Policy Genius, Gabby, and Jerry. And they're getting a lot of business from these companies. So I wonder if Travelers is thinking to themselves, oh boy, we're paying off a lot in commissions to Gabby, Jerry, and Policy Genius. Maybe we should have a Policy Genius, which, InsureMatch, in a way, they're in the same space where let's compare. And through content on Google and stuff like that, they have articles. So
and they have Simply Business for commercial insurance. So this can be their angle for personal lines. Again, it's not clear how much tech is there. It doesn't feel like to me.
But Policy Genius doesn't have tech as well. It's all phone based. It's not about tech.
That's
like
true.
Really, if you can give people the experience to like really compare 100%, who has tech? I mean, Jerry has a nice quote flow, but can you buy immediately at the moment? No, they still give you a quote, and that quote may change. Gabby, the same. So I really think it's about setting these expectations with consumers, like not, of course, misleading them. They think they could buy online, but then it's not the real quote. So then you have unhappy customers. And I think that's, for example, Policy Genius, they were able to do that, get the person on the phone, talk to them, have that human to pressure you, even like to say, okay, it's time to buy, give you the confidence. I had questions about my Geico policy that I bought. I didn't know the answer.
Okay, not only this, he didn't know the answer. He called the gentleman. He wasn't ready to buy, you guys. My brother was not ready to buy. However, the person convinced him
He put a lot of pressure on me. He was very aggressive.
So I think for like an hour or two, Avi had double coverage.
Geico?
Yeah.
Geico.
Let me tell you, he wouldn't let me off the phone. And you understand now why Geico wants, all these website visitors or through the Zebra or EverQuote, they want a chance to speak to them because they have very persuasive salespeople. Now, aside from that, which I don't know how Geico does, because when I went for a quote on Geico, and if Geico is listening, they read Coverager, but don't take away my rate because it's going to be a problem for you. But when I got into the quote, it was like $980 for 6 months. I get on the call and the guy's like, oh, let me find you credits. I said, what credits? What could you get me? He lowered my price by $150. I said, what credit did you give me? I want to know. 5 years safe driving history. I said, I've never driven before. This is the first time we're having a car.
Doesn't matter. You haven't had an accident in 5 years.
He gave it to me. He sent me a link to do the defensive driving course. That's another $62 off that I'll get. Now it does cost me $20 to do the course, but still I'll save $42. So this is the benefit. Online, I'm never going to online again, Geico. No freaking way. I'm going to call and I'm going to say, give me credits, just like Geico did. And you know what? they saved me overall $400 from Travelers. I had Travelers which I got originally through Gabby. So
Wow.
I
This
will be
reminds me
on the
of like
phone. Yeah.
Comcast. This is like calling to cancel Comcast.
Oh, they send
And
you to that special team.
and then next thing you know, it's like you're still with Comcast, but they took $100 off your bill. And then it's like, okay, I might as well stick around. You have to call.
Exactly that. And that's what they do. And by the way, I said this, they have a welcome team where they call you the next day, which is like to, I don't know, bring you forward. And they send you emails. I still get the emails from them for home insurance. I told them Lemonade was cheaper. I get the identity protection. They want me to buy the identity protection. And that's the power of a big company. And that's why I say, like, really, you need to keep in mind that the average consumer doesn't care about you, not because they're bad or anything, because they have other things on their mind. So, find good partners, find committed partners, be very careful, and, try to execute as best as you can. And really, as I said, it's sad, but guilt is your only hope. It really is sad that we got to this point because, we speak to insurance companies, they criticize Root and Lemonade. Like, what did they do? What did they do? Hey, you're to blame that Lemonade and Root are successful. If you would have built a better business, then they wouldn't have a shot. But you didn't. And really is, getting to that emotional place, that is your only chance. Because I don't want to pay for someone going to Google and typing car insurance. That's not a loyal customer. He's looking to compare.
So Nick, in the last 12 months, how many hits did Geico send Lemonade for renters insurance? 12 months.
I didn't even know they were doing that.
Of course you did. It's exactly a year since we wrote the story of Blue Lemonade.
Yeah.
I have no idea how any of that works.
80,000.
I was going to say 100,000.
See? Trust your intuition.
So are you saying that Geico is a big source of Lemonade business?
I wouldn't call it big, but a considerable source. Definitely.
Well, they have 1 million policyholders, right?
Yes, but a hit is a hit. You could land on.
But I think, Sheffy, if I'm not mistaken, Geico sends more traffic to Lemonade than SoFi. Is that correct?
Oh, for sure.
Here's the interesting part. Like SoFi, that's like a big company as well. They get a lot of traffic. They're online. But when we say a committed partner, basic stuff, people go to Geico to buy insurance. So there is relevance. SoFi, people don't go to buy insurance on SoFi, and you have to think about that.
That's why you have to be able, in order to gain insights, you have to be able to be willing to play, which brings me back to Munich Re being willing to play with Dayforward, whatever Dayforward has coming up. Maybe it's not much, but hopefully it's the opposite, right? So you have to be willing to take the risk and experiment on the creative and advertising and marketing side.
Okay. So I take that as a given. So it costs a lot of money to get a carrier and to go full stack. Couldn't they do the same thing less expensively in an MGA model?
I'm not a proponent of full stack insurer.
Why would you want to be an insurer?
I don't understand.
I don't understand.
No, I really don't
think any one of us in this team.
No, listen, if you knew what Tesla is building, then you wouldn't want to be an insurer because there's no shot that you can do what Tesla does. No way. In a few years, you could say goodbye to Tesla owners as policyholders.
Okay, only this week I've learned that Tesla has a dog mode.
Oh yeah, they had it for a long time.
Dog mode?
Did you know about the dog mode?
No.
Avi, go ahead and explain since you're the pet parent here.
When you leave your car and the dog in the car because you're just jumping to a store 1 second, then people look in, it's like, oh, someone left the dog in the car. Let's break the window, get the dog out. So they have a dog mode where it sets the temperature to be, with air so the dog can breathe and everything is fine. And it displays a message. Don't worry, my owner is going to be right back. So don't break my window. Don't call the fire department.
Because it's an electric car, it's not actually running.
Yeah.
So it can run the air conditioner off the battery.
Exactly. Yeah. So why would you want to be an insurer? I mean, if you're already an insurer and you're making a lot of money, fine. But like, what has changed? Like, how did Root change the product? How did Clear Cover change the product? How did Hippo change the product aside from making it more comprehensive? But it's still the same product. It's not like their sensor can make sure your roof is not going to be blown off.
I think there are two perspectives. One is, I think with what happened with Lemonade's IPO, I think there's this feeling that the market will reward these companies if they are full stack. That
for sure. For sure.
They'll get rewarded for it because you'll have more control, because there'll be fear from the investor side that like, hey, you're dependent on these other entities for your capacity, and if they pull it away, you're done, sort of type of thing. Not understanding that insurer has the same problem. Lemonade is fully dependent on their reinsurers. They just transferred it up one level. It's the same thing. So I think there's that they'll get rewarded for doing it. And, I think there's this feeling that you can have a little bit more control over what it is that you're trying to do. Yeah. I just don't see it. I think that anything that you want to do, if you want to get a Munich Re, if you can get a Munich Re to back you on something, they'll back you, and there's plenty of opportunities to find a carrier that can kind of step in for something like that. It's very expensive. You're tens of millions of dollars to get
also
one of these up.
A lot of a lot of responsibility. Like you have to deal with claims. That's a big deal. Like there's so many elements here. But you know what? I don't know. I told Sheffy this a while ago. Why the hell would anyone even want to work in insurance? Why? And you know what? I'm not 100% convinced that the best talent, even as founders, came to insurance. I think the better ones may have gone on to build companies in different sectors. But yeah, I mean, can you ever build a product where the customer is going to say, I want this one. I want this one. I don't care that it's more money. I want this. I don't care that they have a shitty website. I want this product. Yeah. No. Well,
it's rare. It happens.
In what lines of business?
Well, I mean, as a broker, I remember having a customer that didn't want to go with the cheaper option. They wanted Chubb because they were like, Chubb pays their claims. And
can you do that at scale? That's the question.
No, I don't think so.
So that's the problem,
I mean,
because
Chubb has a reputation for that. So I think there's this. So Chubb will operate in areas where a positive claim settlement is seen as an asset. So high net worth, the type of commercial customer that's is especially geared towards coverage. That kind of person is like, hey, if I'm buying this coverage, it better pay off if I need it. They'll go to a Chubb. So yeah, in a way, I think Chubb has kind of proven that you kind of can do that. But for the most part, no.
The closest you're going to get to that kind of product at scale is going to be with pet insurance.
Yeah.
The pet parents, not pet owners, are absolutely grateful every time a claim is paid.
Oh yeah.
And then the other way, the other side of this is also
because
true,
you don't expect it, and you get to the point where
it's emotional. It's an emotional purchase, oftentimes, right?
Yeah. And the dog doesn't complain. Like not once did my dog tell me I don't want to be insured by this company. Not once.
I mean, this would be a good conversation to maybe have someone come in and talk about that. Maybe we can get this marketing guy from Huge.
Yeah. I mean,
talk about brands, like, because I'm so Sheffy. I would say FM Global has a particular brand where people seek it out. There's because they bring the engineering and the loss control to it, so if you got an FM Global policy, you're meeting like very high criteria for fire safety and other safety, and you're getting the best rate possible. Like, so to Avi's point, Avi, you are getting the cheapest price, but you have to do all of these other things. People do seek it out, but there's not a lot of that. That's really hard to do at scale.
I heard that Musk is moving to Texas. He's moving. He's leaving California. So I'm sure Chubb, if they are insuring him, they're happy. No more wildfires. Hopefully, he's not moving to Houston. But if he's not moving to Houston, they should be very happy. And others as well are moving from Dropbox. They're moving to Texas as well. So it should be good. But the question is, really, these are like affluent, obviously rich people. These are not the common. It's not me. I mean, I'm shopping for car insurance. People are shopping to get affordable, to bundle. So you can't do that at scale. You can't. And the only, as I said, the only way. And people are saying, "What the hell is guilt? Like, how can you sell through guilt? How can you sell insurance through guilt?" You'll see very soon how you can sell insurance through guilt, and that is what you have, because that is what Google doesn't have. They don't have humans. It's technology. What are they? Who the hell cares about you? Really, that is what's left for insurance companies. And obviously, Can Geico do that? They're too big. But a Plymouth Rock can do it. Boston Mutual can do it. If I live in Boston, I'm proud. I'll buy from Boston Mutual. I won't buy from Prudential. So that is what we look at, and it's not too late. Like you have many of these startups. They have so much in funding. Be creative. Like go merge. Like if you're a life insurance startup, go merge with a car insurance startup. Come together. Offer more.
That would be interesting.
You really and don't believe the illusion of Lemonade and Root and Hippo. These are not good examples, because
you can't copy that.
They were able to raise a lot of money, and they're telling you we're this and that and that. Most of the policies that Hippo sells is through agents. No technology. It's not customers coming online and buying. So you cannot do that. He can do that. Lemonade can do it. Root can do it. Understand, what you have. Play with your cards and, try to be creative. And you may not be a Lemonade, but you'll be a niche player, and people will buy you for the niche because you control that niche.
Well, I think we heard it here. If you're a carrier out there and you want to sell by guilt, reach out to us. Avi will teach you how to do that.
Oh yeah, we have many tactics.
Okay, well, this is the week. Where's my calendar? Week ending November 4th. Avi, Sheffy, thanks for a spirited discussion. I appreciate it.
Thanks for having us.
Have a nice weekend.
Have a nice weekend. Happy next week, everybody. Thanks for tuning in, and until next time, thank you. Thanks, Avi.
Thank you.
Thanks, Sheffy.
See ya.
Bye-bye.